Hello everyone, welcome back to my channel. So in this episode, I'm going to go over the MACD indicator. So what does the MACD stand for? So the MACD stands for Moving Average Convergence Divergence. Moving Average Convergence Divergence, MACD, is a trend following momentum indicator that shows the relationship between two exponential moving averages. The MACD line is calculated by subtracting the 26 period EMA from the 12 period EMA. The result of that calculation is the MACD line. A 9-day EMA of the MACD line is called the signal line, which is then plotted on top of the MACD line, which can function as a trigger for buy or sell signals. Traders may buy the security when the MACD line crosses above the signal line and sell or short the security when the MACD line crosses below the signal line. MACD indicators can be interpreted in several ways, but the more common methods are crossovers, divergences, and rapid rises and falls. So the key takeaways: the moving average convergence divergence MACD line is calculated by subtracting the 26 period exponential moving average from the 12 period EMA. The signal line is a 9 period EMA of the MACD line. MACD is best used with daily periods, with traditional settings of 26, 12, 9 days in the default. MACD triggers technical signals when the MACD line crosses above or below the signal line. MACD can help gauge whether a security is overbought or oversold, but again, it's not as good as the RSI, but it also is a momentum indicator. MACD can also alert investors to bullish and bearish divergences, with the new high in price is not confirmed by the new high in the MACD, and vice versa, suggesting a potential failure and reversal. After a signal line crossover, it is recommended to wait for 3 or 4 days to confirm that it is not a false move. So I'm in TradingView and I'm going to open up the MACD indicator. So as you can see in the chart here, you have the blue line and the red line. So the blue line is the MACD line, and that's calculated from subtracting the 26-day exponential moving average from the 12-day exponential moving average, and that gives you the blue line. And then the red line then is just your signal line, and that's just your 9-day exponential moving average. And then you have your histogram. So that is your green candles. And you'll have green candles on the histogram when the blue line is above the signal line. And then, of course, when the blue line is below the signal line, then you have the red candles, indicating that price is in a downtrend. And again, the green candles are indicating that the price is in an uptrend. Okay, so how do you use the MACD indicator as a trader? So basically, when the blue line breaks below the signal line, the red line, that is indicating that there probably will be a high probability that the price, the momentum is slowing down, and price will probably might be a reversal, or there will be lower prices expected. So there could be like a trend reversal, or you'll probably see the price sell off, and then it goes the opposite. When the blue line breaks above the signal line, that is called a buy signal. So that's indicating that the trend is about to change and price is meant to shoot upwards. So the higher the bars on the histogram, that indicates when the MACD line and the signal line separate and get further apart. Then you'd have bigger lines on the histogram, and that's indicating stronger trade momentum. So I'm going to bring it down now, and I'll show you with the candlesticks. So again, with the MACD indicator, it shouldn't be used as a standalone like any other indicator. So as I progress with this trading series, you will get a sense of how to use all the indicators, and then what you have to do then is try and use them all together, and it will start to give you then an edge on the market. Like, so you just can't just use one indicator at a time. It just doesn't work like that. So as you can see here in the chart, you see the blue line down here crosses over the signal line, and it actually it actually showed in the chart that there was actually a nice pump in the market, and price started to trend upwards. And again, here you see the blue line then cross below the signal line. But if I just put in my crosshairs, so as it crossed here, so there we made a cross. As you can see, it put in a high. So then you're thinking, okay, time to sell. Price action obviously sold off, drifted downwards, but it bounced and then it put in another higher high. But it didn't put in a higher high in the MACD. So that would be called a divergence. So it's similar like doing a divergence in the RSI, that you can also do divergences on the MACD. So it's good to look out for that. So since you've seen that it put in a lower high in the MACD and a higher high, that's obviously bearish divergence. So that's a very good sign that the price is going to sell off again. So the thing about the MACD is it can be used in all time frames, but if it's just in a sideways market, like, okay, I'll just go to the 4-hour chart here. So as you can see here, Bitcoin at the moment is just chopping sideways. It's like a stable coin. But you can see in the MACD chart, you're getting like loads of crosses from the MACD, crossing below the signal line, then back up again. And it's just chopping up and back, up and down, up and down, up and down. And it's just giving you loads of false signals. So if you see this here, the MACD line is going below the signal line. You would like, okay, that's perfect time for a short. But the price is just literally just staying flat. Like, so you have to be very wary that you just don't use it in a flat market, because then you'll end up just losing money in the long run. So what the MACD really works when there's when the price action is in an uptrend or in a downtrend. So that's the key of when you really want to use the MACD. So you have to keep an eye on that, and again, use it in conjunction with other indicators, and like I said, price action and all that good stuff. So that's basically how you use the MACD indicator. So again, I'm just going to go back to the day chart, and again, you can use the MACD not only just for buy and sell signals, but just to be wary that some signals can be wrong. Like there's no, but when they do cross, it does give you an indication of where the price is going to go. So there you have it, folks. That's the MACD indicator. If you have any questions, type them down below, and I will get back to you on them. And I hope you're enjoying this trading course. And if you're getting value out of these videos, please consider hitting the like button, hitting the subscribe button, and I will see you in the next video.